Hello traders, welcome to FreeFX. Today is Tuesday the 18th and the month is August. We have a lull or a break in trading conditions through forex markets. It is an interesting month because we have a variety of opportunities that are either developing or about to develop, and certainly looking at the charts in front of us and following as we do, or as I personally do every day, what moves the market offers, we have seen a lack of volatility that has either sometimes been exacerbated into the exact opposite, which is a bump up or a bump down into sudden moves that haven't really found follow through, or we've seen a lack of movement altogether. Now this obviously has had an impact into what kind of trades we would like to take, and it doesn't really help when we have great events coming up. Now these events are not per se going to give us the lifetime, the sort of trade of a lifetime opportunity, certainly, but we do have the potential and also the probability of an enhanced trading opportunity in the rate decisions coming up in September. And there are three that I'm looking for and that I am keeping an eye on. The three really being the Fed, and that's on the 17th of September. And the week before, the 10th, we have the Bank of England during the European hours, and in the Asian hours we have the Royal Bank of New Zealand. So we have three major events within a week in September. Now that obviously means that as we are about a month away, about 3 weeks away from Bank of England's rate decision and the Fed and the Royal Bank of New Zealand, a currency pair like the Euro USD may not be affected by that, but a currency pair like the pound Kiwi that you see here on the daily chart has great potential. And I'd like to highlight why this is. And what I have here is two charts, and these two charts are overlays. So we have the main chart here and the price on the right hand side, that's the pound Kiwi. With it, I have added the Kiwi dollar in blue, and this shows us a circle, if you like, that really gives us a sort of well, a kind of cycle, and this is a 6-year cycle. Now it's not a cycle per se, it's more an arch that starts somewhere and ends in the same place. Okay, so if we looked at the two currency pairs are obviously mirror versions of each other, which means that the pound Kiwi, as I discussed before, takes its cue mostly from the Kiwi US dollar, although pound events like this morning's very positive CPI, Consumer Price Index, release was a pound event, and that boosted the pound Kiwi. But generally, for the longer trends, it's certainly the bearish trend in the Kiwi dollar that's generated this tremendous rise in the pound Kiwi, as well as bids for the pound's future and expected rate rise. But anyway, it's the Kiwi dollar that we are keeping an eye out on. Obviously, this is why I've overlaid the Kiwi dollar. Now, this is fairly clear. What the red line indicates is the 240 level, and this was resistance or a demand area in 2008, and then it was a demand area also, you'll see it more clearly if I stretch that out a little bit more, and in 2005. Okay, so it's a significant level because it does appear in a chart further back, and the move from 2005 against this demand area of 240 was tremendous. The move in 2008 against this was again tremendous. Now, since the break below it, okay, we had an inverse head and shoulders pattern. So this bear move eventually, okay, breaking back up. Now this is obviously more visible on something like the monthly chart. Okay. There's your head and shoulders there. The inverse head, 2 shoulders, and the break back up the neckline here. But I'm interested really in the daily chart, because I'm going to show you something which may have some bearing into what's about to happen with those big events that I've mentioned before. Now, the overlay does change position up and down depending on how quickly we zoom and in and out of these charts. So now you can see it. It's put it in an interesting way where they're basically in a sort of kissing zone where they're touching. And so this mirror version looks very obvious like this. And this circle around them really gives you this idea of a cycle returning to a fulcrum or a central position. Now this box that I've tried to show you is of significance. Why? Because following the great financial crisis, this the big moment, October 2008, big swings, and then in 2009, in March, April, end of March, beginning of April, we entered this zone, okay, and this zone going from about 260 to 250, about 100 pips. This zone represents congestion or consolidation, if you like, and this is significant for 2 reasons. One, when we have a consolidation period of this kind, we certainly have cause for concern. If we're trading a pair like the Kiwi or the pound Kiwi, or anything to do with the pound or the Kiwi, in this case, this represents something that is lacking either in sentiment or in forward guidance from a central bank, let's say. Now, what happened here is that we had some kind of event on the 10th of August there, okay, that pushed price significantly low. So we went out of this zone, okay, around the 10th. This is a big red candle here. We could stretch this a little bit lower to just signify the break that happened on this day. So on this day, the pound Kiwi, the high was 249 and the low was 243, 600 pips. Okay. Now currently the pound Kiwi is experiencing a daily range of about, on the average trading range, is about 300 pips more or less. And so this is double that. What actually triggered this event? Well, this was the release of UK employment data, which showed that there was a tremendous rise in unemployment. The then head of the it was the I'll find you the exact name, the Trade Union Conference General Secretary, Brendan Barber, said, and I quote, that with over 1 in 6 young people out of work, unemployment is at crisis level. The government must do more to get people back into work, otherwise we risk losing another generation of young people to mass unemployment. Okay, so there was dismay across the board. The Labour government and the Conservative opposition were obviously united, although at opposite ends, in condemning the lack of progress in employment figures. So this sort of triggered something, and this congestion was waiting for an event just like this. Okay, and since then, 240 wasn't far off. 240, 300 pips, not a big job really, considering the 600 pips moved in one day. So then that was the trend that was generated from that single event. Okay, so if we went from there and started measuring this, it moved 3,400 pips more or less in a space of, that's October, August. Okay, so 2 months, and you can, that's a big move. Now, that was 100 trading days. I counted that earlier. So 100 trading days it's a long time. Yes, by any standard. If you're trading a daily, an intraday price action, or if you're trading on a weekly chart, still 100 days, it's a long time to wait. And you wouldn't necessarily sit doing nothing. You might look for other opportunities in different areas. Now, we are at this point in a similar scenario. This is the Kiwi USD, and it's getting stuck on a 0.65 level, which again is a cycle coming back to this level, which is a strong level. So it obviously awaits some kind of opportunity to break, or potentially to bounce back up, but we don't know that. But certainly the fundamental outlook seems to favor the US dollar, and there seems to obviously disadvantage the Kiwi with rate cuts on the go. So this is the 17th of July, and we are 1 month on. So it's not 100 days. Obviously, it's 24 days actually since we hit this point, both in the Kiwi US dollar and the pound Kiwi. 24 versus 100. That's a quarter of the time. Now, the rate decisions that we look for are for movement and resolution of this congestion are the 10th of September, which is both the Bank of England's rate decision and the Royal Bank of New Zealand rate decision. So we have 2 in 1 on the same day, one after the other. So this congestion phase is here. And we obviously have a lot of potential to the upside for the pound Kiwi historically, and to the downside for the Kiwi dollar. So the probability is on the side of continuation of this trend that started back in April to progress further for the pound Kiwi. Now if we extend it, this is 25 days. So if we make this 100 days, okay, we would want to go, that's a quarter, so it would be something like, let's try something here. If we measured 100 days from here, that's 63 days. Let me just stretch out a little bit more and measure it again, just to give an idea where we might end up if we had 100 days, 100 trading days, where we had congestion just like before. This would take us to about this point in time, which is there, the 1st of November. Okay. Now, let's say that we had a congestion of 100 days and we wanted to prepare for it the 1st of November. Okay. So we'd have to look at the economic calendar for November and see what kind of things we might find in November that could give us the right spark. And for that, we go to some kind of economic calendar and see from there whether we could take cues. Now, obviously, what we're looking for is central banks will give us obviously the major points in time. And for this, I go to daily FX, and you can see here that for the Bank of England, there's the 5th of November. Okay, so not far after the 1st of November. And for the Royal Bank of New Zealand, we have no November event, okay, because the October rate decision comes on the 29th, so close to the 1st of November. So those two would be something that we look for cues. Now, obviously, on the 10th of September, that's about here, we have these two rate decisions. We have the Bank of England, which is all set for a rate rise, but again, the last vote was 8-1 to keep rates unchanged. So the momentum within the Monetary Commission, Policy Commission, hasn't really changed enough to give economists or traders a great confidence that this will happen, the rate rise will happen now. So if, say, the rate rise did happen, or the Royal Bank of New Zealand cut rates, we wouldn't have to wait until the 1st of November to see a break further up through 240 or a breakdown from 0.65 in the Kiwi dollar. So there are two scenarios there. If nothing did happen, we may have a status quo until possibly November. So be prepared for that event as well. I hope this video has helped you, and please leave comments and tell me if you'd like me to discuss particular topics in future videos. Thank you very much, and best of luck with your trading.